Problem 17A continued. We're still talking about the Graham Company. I'm not sure what the Graham Company sells, but I don't think I'd let my granddaughter go out with the owner. Anyhow, it's asking us to interpret this sheet that we filled out the last time with all those numbers. Okay, remember that one? And we're not going to address the numbers up here. We're just going to look at the totals. Okay? So it asks us to look for revenue. And the revenue is over here. And it's the sales that we made, whether we collected them or not. And that's $11,000 total. So that's our consulting revenue, $11,000. Now it asks us to list our various expenses, and we have those listed down here, and we have them broken out by rent and salaries and cleaning, etc. So we're just going to go down the list, and we're going to pick up $2,200 for rent expense, and then it asks us to continue, and we're going to go down, and the next one we come up to is salary expense, and remember we had two of those, so that's $1,500. And then we had cleaning expense, and that was $750. Actually, I think that $750 was cleaning and that was the other salary, but $750 is $750. And then we have telephone expense, and that was $300, and I still don't know what he made $300 worth of calls on. Let's see, he sells stuff by the gram and he spends a lot of time on his telephone. This guy's getting sketchier and sketchier. Then it says utilities expense, and we have utilities expense, and I'm wondering if that's all for grow lamps, and that was $280. And then we have advertising expense of $80. Probably t-shirts that say I get high with a little help from my friends. Anyhow, our total expenses come to $5,110. And that's the number we came up there when we added up the total expenses, so we know we got it all. By definition, revenue minus expense is net income. So we have $11,000 in revenue, we have $5,110 in expenses. Our net income is $5,990. That's the first part of part 2. The next thing it asks us to do is to take that $590, because what I need you to see, and it would be easier if I drew in the line where you could see it, is that this net income goes into a funnel, and that funnel comes out to owner's equity, which is also called the statement of retained earnings. They're the same term. So let's do that next. We have to handle this $59.90. So $59.90, I just happen to have that handy, is the retained earnings, is the net income for the period, $59.90. This was our first month in business, so we had nothing in retained earnings. At the beginning, zero. Then we made $59.90. Didn't say anything about us giving away dividends. Nowhere on here did we say anything about dividends. But they're not expenses, so let's go back and check the original paper just to be sure And sure enough, right here, we do indeed have dividends of $14.40. And by definition, dividends come out of retained earnings. So we need to take that out, those dividends, $14.40. And our retained earnings at the end of the period is $59.90 minus $14.40 for $45.90. That's the second part. So now we have the owner's equity washed through the funnel. So we have revenue minus expense, net income equals owner's equity. Owner's equity goes on the balance sheet. That's part of the balance sheet. So we need that $45.90 for the balance sheet. So let's put that back there so we have it all. And I'll give us a little more space here. I just need to zoom us back out a little bit. There we go. And let's take a look at this. We need our $45.90. That's our retained earnings at the end of the period. So we need that. Our common stock, we have to go back to our original document, and in reality this would be the original journal. And we see we have 40,000. Remember that? It was the very first transaction we did. Seems like only yesterday, I'm sure. 40,000. So our total equity is $44,590. Now we have to get our total liabilities. Liabilities, things we owe. So we go back and take a look at our accounts payable, notes payable, mortgages payable, car loans payable, baklava payable, any payables. And going to our original document, our journal, we find that at the end of the period we had $18.90, but we paid that, so the only thing that's left is $80. So our accounts payable is $80, and that's all the liabilities we have. So our total owner's liability and equity is $44,670. Now this is a balance sheet. It's a teeter-totter. Looks just like that. That's what a balance sheet looks like. Okay, it's a seesaw. It's a hunk of plank over a log and your kids are on either end playing on it. So if this side says 44,670, you know this side has to be 44,670. Now, you don't just plug that number in. You have to add up all of the assets to see. Well, let's take a look at our total assets. In our assets account, we had cash, we have accounts receivable, we have office equipment, but there could be thousands of other assets. There could be boats, planes, trains, automobiles, farm acreage, buildings, all kinds of stuff. Anything you have is an asset. If you have it and it's of value, it's an asset. Well, our assets are but two: cash, My favorite asset. People say cold cash. Now, I don't think it's cold. I think it's just warm and lovely and wonderful. And office equipment. There are only two assets. We add those together and we come up with $42,780 for cash, $1890 for office equipment, and we could have cars, boats, planes, acreage, which I'm probably going to spell wrong, which I definitely spelled wrong. We could have a jillion things. We don't. We only have equipment, and that adds up to $44,670. So our balance sheet balances. We got that part right. Okay, we're done. Stand by for part 3.